In this video, we're going to be performing a deep dive on Nucor Corporation's dividend safety. To begin, let's talk about Nucor Corporation's business model. Nucor Corporation is the largest publicly traded U.S.-based steel corporation. The company manufactures steel and steel-related products. Primary end markets include steel service centers and fabricators. The company employs 25,000 people. Nucor Corporation trades with a current market capitalization of more than $18 billion and generates nearly $25 billion in annual revenues. Nucor Corporation may not be a well-known dividend stock, but it has a compelling track record of dividend growth. With 46 years of consecutive dividend increases, Nucor Corporation is a member of the Dividend Aristocrats Index, a group of elite dividend stocks with more than 25 years of consecutive dividend increases. In fact, with just 4 more years of dividend growth, Nucor Corporations will become a dividend king, a group of even more exclusive stocks with 50-plus years of dividend increases. Looking ahead, investors interested in owning shares of Nucor Corporation will likely want to know the safety of future dividend payments. For the remainder of this video, we will discuss the company's current dividend safety from 4 perspectives. 1. Its dividend safety in the context of its current earnings. 2. Its dividend safety in the context of its current free cash flow. 3. Its dividend safety in the context of its recession performance. 4. Its dividend safety in the context of its current debt load. First, let's discuss Nucor Corporation's dividend safety in the context of the company's current earnings. When Nucor Corporation announced its fourth quarter and full-year financial results on January 29th, the company reported that it generated earnings per share of $7.42 for 2018. For context, Nucor Corporation paid $1.52 of common share dividends during the same time period for a dividend payout ratio of 21%. Using earnings, Nucor Corporation's dividend appears very safe for the foreseeable future. Many analysts believe that comparing a company's dividend payments to its free cash flow is a better method for assessing dividend safety. Accordingly, we will now compare Nucor Corporation's current dividend payment to its free cash flow. In 2018, Nucor Corporation generated $2.4 billion of cash from operating activities and spent $980 million on capital expenditures for free cash flow of approximately $1.41 billion. The company distributed $485 million of common share dividends during the same time period for a free cash flow dividend payout ratio of 34%. Using free cash flow, our conclusion is the same as when we used earnings to measure Nucor Corporation's dividend safety. The company's dividend appears safe for the foreseeable future. Companies do not cut their dividends in good times. Instead, dividends are reduced when companies experience financial difficulties. Accordingly, this section will analyze Nucor Corporation's current dividend safety in the context of the company's historical recession performance. We believe that the best way to measure a company's recession resiliency is by measuring its earnings per share performance during the financial crisis that occurred between 2007 and 2009. Nucor Corporation's performance during this time period is shown here. Nucor Corporation's earnings per share suffered a severe decline during the financial crisis. The company was one of the few dividend aristocrats that saw earnings per share results during this period of time. In fact, the company did not top 2008's earnings per share results until 2018. Although the company's dividend was not covered by earnings per share in 2009 and 2010, Nucor Corporation was able to maintain its dividend growth streak. Given this feat, we remain cautiously optimistic that the company would be able to continue to pay rising dividends even if earnings per share suffered a similar decline during future economic downturns. The last angle that we will use to assess Nucor Corporation's current dividend safety is by looking at the company's current debt level. More specifically, we will see how much the company's weighted average interest rate will need to increase before the company's free cash flow will no longer cover its dividend payment. In 2018, Nucor Corporation generated $136 million of interest expense and had $4.2 billion of debt outstanding for a weighted average interest rate of 3.2%. The following image shows how changes to Nucor Corporation's weighted average interest rate would impact the company's dividend coverage as measured by free cash flow. As the image shows, Nucor Corporation's weighted average interest rate would need to rise well above the 30% level before its dividend would no longer be covered by free cash flow. Accordingly, we believe that Nucor Corporation's debt level is unlikely to impact the safety of its dividend moving forward. Thank you for watching today's video, which performed a deep dive on Nucor Corporation's current dividend safety. We invite you to subscribe to this channel and like this video, which will help more people discover Sure Dividend's investor education efforts. If you're interested in learning more about our systematic approach to dividend growth investing, visit our website at www.suredividend.com.